Good morning, shareholders. Thank you for attending our September quarter 4C investor update. We've had another really exciting quarter for the company with our global expansion continuing apace. This quarter has seen new records for sales, for sample volumes and revenue figures, and we're continuing to deliver against our FY23 targets. I'll keep this update fairly brief, running through our progress made during the quarter, as well as a view to our financial performance. And following the call, Brett Coventry, our CFO, and myself will be available for a Q&A session. Operator, if you could move to slide 3. On the back of further deployments achieved during the quarter and sustained performance of our deployed units, we've been able to increase the company's total revenue to $5.1 million, which is an increase of 9% quarter on quarter or 112% year on year. We've processed a little over 740,000 samples during the quarter, which is a 14% increase on the previous quarter and 49% year on year. The continued growth of samples processed is a key metric for the company. It's a really strong indicator of continued industry adoption of our PhotonAssay technology on a global basis. As we discussed during the annual results presentation, we've had a very strong quarter from a sales perspective with a further 10 units signed during the quarter. This brings the company's total contract value to $703 million, which is a 26% increase quarter on quarter, and it's almost a 5 times increase year on year. So very, very significant progress from the sales point of view. Furthermore, this figure doesn't account for a recent agreement that we've entered into for deployment of a further PhotonAssay units to ALS in Canada. We're excited by the expansion of our relationship with ALS into Canada and looking forward to that unit being operational during calendar year 2023. Our ongoing growth in North America is now supported by multiple laboratory companies, as well as the mining companies that are providing samples to these labs. And we're pleased to see the accelerating adoption of our PhotonAssay technology in this new market. During the quarter, the company was cash flow positive from an operating perspective. We generated $0.8 million in net operating cash flow, and we continue to invest in growing our PhotonAssay unit base. We had investment of approximately $9.7 million into property, plant and equipment, and that leaves us with a healthy cash balance at the end of the quarter of $82 million. We're continuing to accelerate our deployment capability, supported by the strong cash position and the significant number of units committed to our customers. Lastly, for this slide, we've deployed a further 2 units during the quarter and another unit during October, which brings our current deployed unit base to 13. This includes 2 mine site-based units, one into Mali and another into Queensland, that were deployed out of this 13, moving from 10 to 13, 2 mining, 1 laboratory, and the laboratory was a further unit into ALS in their Perth facility. Next slide, please, operator. As a quick reintroduction to our business model, our customers commit to a take-or-pay arrangement with a minimum monthly assay payment due to Chrysos. For any samples that are processed in addition to the customer's minimum commitment, they pay us on a per sample basis, which forms our additional assay charges, or AAC. The graph on this slide illustrates Chrysos' revenue breakdown, with the yellow section representing the minimum monthly payments, and you can see that they continue to grow with each new unit that we deploy. This provides us with a baseline committed revenue for subsequent periods. The grey section above this is our additional assay charges, which is driven by that utilisation of our deployed units. And both of these segments show further growth over the period, increasing both year on year and quarter on quarter. Our minimum assay payments were up 12% quarter on quarter, and the 13 currently deployed units have a combined minimum monthly assay payment of around $1.6 million, which is $19 million annualised. And as I said before, this becomes the baseline revenue for future months, irrespective of utilisation. The minimum monthly payments offer reliable, forecastable revenue and are a key component in our ongoing discussions with potential financiers. Next slide, please, operator. In the last slide, we discussed the link between additional assay charges and our deployed unit utilisation. Shown in yellow on this chart is utilisation for the past 18 months, which is overlaid by the black line, and that is the absolute number of samples that we process on a monthly basis. We've had sustained strong utilisation throughout the quarter with an average of 59% utilisation. This is in comparison to our prospectus forecast of 55% for FY23. Utilisation in excess of our minimum commitments continues to drive our additional assay charges, with approximately 20% of our Q1 FY23 revenue originating from these additional assay charges. As I mentioned on the last slide, during the September quarter, we did process in excess of 740,000 samples, which is a 14% increase on the June quarter. You'll see on the chart that there's a small tapering in the month of September of both samples per month and of utilisation. We see this simply as a fluctuation of throughput from our laboratory and mining partners, and anticipate that sample volumes will continue increasing in alignment with our expanding unit base. Next slide, please, operator. We currently count 3 of the world's largest laboratory companies and 2 of the world's largest gold miners as PhotonAssay customers. During the quarter, we substantially expanded our relationship with Britannia Mining Solutions, which is a new entrant into the laboratory space, and it overlaps well with our other upcoming deployments from a geographical perspective. Also, after close of the quarter, we've signed an additional unit with ALS Laboratories, which I discussed on the previous slide, going into Canada during calendar year 2023. Hopefully everyone's now familiar with our measurement of total contract value, but just as a refresher, we consider total contract value, or TCV, to be the sum of the minimum monthly payments due to Chrysos under our committed contracts. That's those that are either deployed already or are upcoming for deployment, and then that's calculated across the expected term of those contracts. This value then converts to revenue on a monthly basis as we invoice against those contracts. As you can see here, the additional contracts signed through the quarter have added substantially to our TCV, with growth of 26% quarter on quarter. Next slide, please, operator. To summarise, we continue to experience strong and sustainable growth. We've had a quarter of record sales with the 10 additional units that have been leased, and we continue to post new quarterly sample volume records. Our deployment unit base continues to grow, and we now have our 13 PhotonAssay units operating around the world. And we've closed the quarter with $82 million in the bank. Our long-term committed revenue from Tier 1 counterparties provides us ample opportunity for additional gearing, and we really consider ourselves to be in an excellent financial position to continue accelerating our global growth. Thank you all for attending today, and very happy to take questions from the line.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up a handset to ask your question. Your first question comes from Josh Kannourakis from Barrenjoey. Please go ahead.
Hi, Dirk and Brett. Can you hear me okay?
Which is loud and clear, Josh.
Perfect. Just first question with regard to pipeline and sales activity. You're obviously establishing some clusters in particular regions, as we can see. Can we talk a little bit about sort of where the sales efforts are primarily focused at the moment? And in terms of the next, quarterly updates at that sort of probably 5, unit cadence, how you think about the split between, miners, labs, etc.
Yeah, absolutely. So you can see from the latest quarter that we've had more units going into mines than into laboratories. We've talked previously that we are very keen that those end users of our technology are actually taking those units directly to the mine site. So at the moment, for the laboratories, all of those samples are still originating from the miners. So converting then those miners to be direct users of the technology is obviously an ongoing focus. The ongoing efforts of clustering allow us to reduce our costs over time. So you can quite clearly see where we talk about an additional unit going to ALS in Canada. We've got the Britannia unit that we announced recently going to Montreal in 2023 as well, that we are starting now to get quite a cluster of units into Canada in particular. We're also seeing that around West Africa. So for us, that sort of focus on where our units go geographically is definitely something that we take into account. And then with regard to ongoing sales, we've talked before that we want to keep 2 things happening here. We want to keep long-term multi-unit deals supporting our long-term manufacturing pipeline, and then coupling that though with an immediate delivery availability in the order of around 15 months. So we want to make sure that when a new company comes along or a particularly strategic or economic opportunity comes along for us, that we have that unit available to deliver. And I think that you can see that quite clearly from this new lease agreement that we've signed with ALS. You know, we're announcing this agreement obviously during the quarter now or post-quarter even. And that unit is slated for delivery in the tail end of 2023. So you can actually see that shorter time period for delivery is still available where we are seeing these opportunities.
Got it. And so for some of the large global lab providers, and I know you've obviously got relationships with a few of them, still some not as yet, how are they thinking about, their sort of, rollouts or sort of, strategy around your technology? Do you think it is more on a piecemeal basis, or do you still think there's opportunity for, large multi-year deals?
Oh, I think there's huge opportunity here for large multi-year deals. I mean, obviously I can't talk for the laboratory companies themselves, but you've seen Intertek expanding their relationship with us now to go into Africa with PhotonAssay. You're seeing ALS expanding our relationship to go into North America alongside Chrysos. We're also about to begin installation of the SGS unit, which will then give them an opportunity to have an operating unit. By all means, we would hope to continue to expand our deployments going into all of those major players.
Okay, got it. Thank you. Just second thing, just with regard to the deployments, and obviously I think you was noted in the prior update and in August that you were deploying sort of 3 units at once and had the team set up. Can you just talk a little bit about the operational infrastructure as it stands today in terms of deployments, how it's going in terms of, functionally deploying the units, and what the sort of step up in, I guess, headcount is in terms of that, the capability that needs to build out over the next 12 to 24 months?
Yeah, absolutely. So moving to a point where we could concurrently deploy 3 units was a big milestone for the company. That really enables us to be deploying around the world in all the locations that we're clustering these units, and it's at a level that allows us to get through to our forecast number of units at the end of FY23, which remains at 21 units. What we're looking to do there is build up that deployment capability so that we have local deployment teams in each of our key regions. So, 1 or 2 deployment teams in each of North America, Africa, and Australia. That really supports that ongoing growth. And we continue to build the infrastructure of growing our overall capability. So this is the sort of the manufacturing capacity with our partner NewTek, our integration capacity in Australia for the equipment that we produce over here, and then also our capability of deployment so that we are able to scale up to the 18 units per year going into FY24. So we've discussed previously that we've had a manufacturing capacity at the moment, or an overall capacity of 12 units per year, growing that 50% during the period. So the headcount growth that you see, consistent with what we put out in the prospectus, is really around deploying and then supporting those units around the world.
Got it. And just final one from me. Obviously, operating cash flow positive in this quarter, but still burning some free cash flow in line with the sort of gross capex forecast you talked to. Can we just chat on the debt facility and sort of just to reiterate, I guess, timing on that still being sort of FY23 and how you're sort of thinking about the positioning of that in the current landscape?
Thanks, Josh.
Yeah, so I might jump. Oh no, you go for it, Brett. You're a better option for this one.
Thanks, Josh. Yes, we continue to have meaningful discussions around the banking facility, and certainly we remain on track to have an announcement of that in H1 of the new calendar year. So that is as we previously outlined, and obviously, we want to make sure we get the right kind of banking partner and move towards having a facility in place well in advance of when we would have continued to use all our cash to deploy units.
Yeah.
I mean, the nice thing for us is if you look at the you look at where these revenues are coming from, you look at the profitabilities of the units, and in particular the number of units that we have in tier 1 jurisdictions with tier 1 counterparties. We do have that option to take that to the bank, and we're confident of getting the right funding opportunity for the company.
Awesome. Thank you, guys. I'll give someone else a go.
Thank you. Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. We will pause for a short moment to allow questions to be registered. Your next question comes from Cameron Bell from Canaccord Genuity. Please go ahead.
Hi, guys. Just one question from me. You mentioned that the drop in September utilisation. Could you just expand on what actually drove that?
Yes. Look, I mean, what we see from all of the laboratory and miners around the world is month-to-month fluctuations. And depending on sort of which facility is fluctuating, it either has a smaller or a larger effect on our numbers. I mean, if you look at that chart, you can see that in recent times we've had a couple of other down months and then a correction back up. Specifically, if you look at sort of November, December 2021 and April 2022. We don't see these as in any way concerning. And I guess the narrative that we're putting around this is we don't think that this is a function of any kind of change in the industry. We simply see it as fluctuation where you've got a couple of different individual units lining up with their changes at the same time. So we certainly expect that as we continue to deploy more units, that will continue to grow over time, and would certainly be expecting that the next quarter will continue to be higher than this quarter.
Yep. Okay. And then just thinking about the utilisation, like what do you see as a good sort of longer term steady state target?
So probably the closest to that in the utilisation number is what we've provided in the prospectus. So the prospectus forecast for FY23 is that 55%, which I've sort of put the relative numbers there against the 59% that we achieved for the quarter. To some degree, the utilisation there and the reason that drops a little bit is based on a ramp-up period for units. So you can imagine that as we have more units that have only been running for a few months in a ramp-up period, it pulls down that utilisation rate a little bit during that time. So as you've got more new units, you end up pulling down that utilisation rate. Certainly for us, we would be expecting to be seeing that sort of the sample volumes in particular continue to increase. Where the utilisation specifically lands, we're obviously at the bottom end. You're protected by the MMAP numbers or the committed utilisation percentage, but somewhere in the range of that sort of 50 to 60% is where we're seeing or where we're considering it to be continued strong utilisation.
Yep. Okay. Can you actually have individual units running at say 95% utilisation, or does it cap out?
The way that we actually choose the nameplate capacity of the unit, which the utilisation is based against, is the throughput that we expect that we can achieve month in, month out, irrespective of sort of annual schedule maintenance and this type of thing. So we've actually seen a couple of units run at 120% utilisation for a month. So it's very, very possible that you would have units up running at 90%, and very often we do. This is then a function of the sort of the dual business model of the company, where we have two discrete customer bases, one being the miners and one being the laboratories. You could imagine that laboratories would tend to be operating as many samples as they can in that laboratory, because that's their business model and their profitability depends on their ability to get a large number of samples through. Meanwhile, those units that we deploy directly to miners, what we tend to see is that the actual throughput is more similar to the committed throughput. The way that then the business model works, and again, all this is fleshed out a little bit more in detail in the prospectus, is if we have a customer committing to a lower throughput, and we have an expectation of a lower throughput, they will be paying a premium price per sample. Meanwhile, where you have a laboratory in a prolific gold mining region running at or near capacity, they would have a slight discount to that rate. So the unit economics for Chrysos are quite similar at this point, whether it's a miner or a laboratory.
Okay, thanks guys.
Thank you. There are no further questions at this time. I'll now hand back to Mr. Treasurer for closing remarks.
Thank you very much, Sari. Look, we're really pleased with the performance for the quarter and looking forward to providing a further update at our AGM, which is late November in Adelaide. So hope to see a number of you there. And also we have our next 4C coming out in January. So thank you very much for attending and look forward to the next opportunity.
That does conclude our conference for today. Thank you for participating. You may now disconnect.